Welcome to The Explainer. Today, we're diving into the state of crypto 2026, because let's be real, everything you thought you knew about how this market works is changing. The old rules, they're out. For the longest time, the crypto market had this predictable beat, a 4-year rhythm all tied to Bitcoin's halving cycle. It was this crazy high-stakes game of boom and bust, right? Almost like clockwork. Well, guess what? That rhythm is broken. The old playbook, it's completely useless now. What worked in the past is not going to work anymore. So what does this shift actually look like? Well, we're basically watching crypto grow up. It's moving away from being this wild, retail-driven roller coaster with those insane 80+% crashes to something way more stable, something anchored by big institutions. The key takeaway here? Less crazy speculation and much, much milder corrections. All right, so let's break down this new world. We're going to look at 4 new rules of the game: the new institutional anchor, crypto's financial plumbing, the real-world connection, and, my favorite, finance on autopilot. Okay, rule number 1, the new institutional anchor. Let's talk about how patient capital has totally changed the game. So what's behind this shift? It's really one big thing: the explosion of regulated products like ETFs. They've become this super easy on-ramp for traditional investors. The big funds, the retirement accounts, they can now get into crypto without the headache of actually holding the assets themselves. And the amount of money we're talking about is just wow. We're looking at a projection of over $400 billion in global crypto investment products by the end of 2026. To put that in perspective, that's more than the biggest NASDAQ 100 ETF holds right now. It's an absolutely mind-boggling amount of cash. But here's the kicker. You'd think with all this growth, the big institutions would be all in, right? Well, they only hold about 27% of these shares right now. So what does that tell you? It means we are just at the very beginning of this wave. There is so much more room for this to run. So all this new money has to go somewhere, right? It's not just sitting there. It's actually building out the infrastructure for a whole new digital economy. Let's talk about crypto's financial plumbing. And at the heart of this new plumbing, stablecoins. These are basically digital dollars, and they are on a rocket ship to becoming a $1 trillion market. Yep, trillion with a T. I mean, just look at this growth. It's been absolutely explosive, a 10-fold increase in just 5 years. And these aren't just for traders anymore. No way. They're becoming the fundamental payment system for global business. You've got giants like Visa and Stripe jumping on board, integrating them right into their networks. And all that stablecoin money? It's like rocket fuel for what's called decentralized finance, or DeFi. We're expecting to see the value locked up in DeFi more than double to $300 billion. This isn't a sideshow anymore. It's becoming a central part of how global money moves. Okay, so we've got the big money and we've got the new plumbing. But the big question is, what's it all for? What can you actually do with it? Let's look at the real-world connection. One of the first killer apps is something called prediction markets. Think about it. They turn literally any real-world event, elections, economic news, you name it, into something you can trade. So you're not just betting on prices, you're betting on what's going to happen in the world. And this is not some small niche thing. These platforms are blowing up. We're talking about $100 billion in trades a year. This is becoming a whole new way to get real-time intel on what the world is thinking. And that's just one piece of the puzzle. Crypto's footprint in the real world is getting huge. We're talking about tokenizing things like real estate and bonds, putting them on the blockchain. That market alone is expected to hit over $500 billion. And remember ICOs? Well, now they're growing up too, becoming a regulated mainstream way for companies to raise money, kind of like a modern IPO. All right, for our final rule, let's look ahead. This is where things get really futuristic. We're talking about putting your finances on autopilot. This is what we call the agentic economy. Just picture this. What if you could have an AI assistant that manages your finances for you? An AI that talks directly to the blockchain to carry out complex strategies all on its own. And the best part, it's incredibly simple for you. Step 1, you just give a command in plain English, something like, hey, find me the best return on my money. Step 2, the AI agent goes to work talking to all these different systems on the blockchain. And step 3, your goal is achieved automatically. It's like having your own personal financial genius working for you 24/7. And I know this might sound like something out of a sci-fi movie, but it is happening right now. These AI-managed systems are already handling millions of dollars. This is the real endgame here. Crypto isn't just programmable money anymore. It's becoming programmable intelligence. So if you take away one thing from all this, let it be this. This isn't the crazy euphoric boom of the past. What we're seeing now is the slow, steady, deliberate construction of a brand new global financial layer. The casino days are over. So yeah, the rules have definitely changed. Which leaves us with one big question to think about. As crypto finally grows up, what part of our financial world is it going to rebuild next?